Hey, what's going on, everyone? Winston here. I'm here with Chris and Dex. This has been a requested video, so we got Dex here sharing his screen. He's been killing it, absolutely killing it in the results section as of late. So yeah, Dex, go ahead, take it away.
Sweet. Thank you for having me on, guys.
Yeah,
It's
thank you for coming on.
pleasure to. Oh man, it's a pleasure to be here and finally being IKONIC. Like I've been wanting to join for a while,
Yep.
but I wanted to make sure I cleared everything else that I was doing first, so I can give it my full attention. And yeah, so happy to be here.
Awesome.
So I've been into like SMC for a while. I'm really good friends with Harv, and some of the other guys have come over as well. And like, yeah, it was a bit of a game changer, really, learning some of this stuff. And it was like the missing pieces that I needed. That's kind of helped me like holding on my positions. Like I've just suddenly doubled my profits. Like the past since joining, just knowing certain things, because you know when you can, if you can hold or not hold, kind of thing. Do you know what I mean?
Oh yeah.
For sure, bro.
Yeah, so it's giving me a bit more confidence in the market. Even the thing with the ranges, like I just knew order blocks really before and FU candles. That's it, you know, and that limits you. You know, you're on the high time frames looking for these plays, and then you're waiting, you end up missing them. And I was like, this smart money stuff, man. I've got to get on this low time frame stuff.
Yeah.
And
Yeah.
and yeah, it's just a complete game changer, man. Because you wanna go on and you wanna be like, bam, there we go, sweet, got a play. I'm done in 15 minutes to an hour. You know,
Yeah.
that's a trading day done. So yeah, like I've always like been into scalping. It's just I just love it. I just like the fast paced thing, and then I realized, man, you can obviously scalp smart money. Like as you guys know, you can like scalp into point of interest, and if you know where the market is, you can just jump on any opportunity within reason, like.
For sure.
And yeah, just knowing that's wicked. So like what I learned with having some lessons with like somebody that used to work quite high up within, you know, the finance world, taught me a few things and just piecing things together really from everywhere. So obviously the liquidity thing. So if we look at it, say from like a point where the market's not open yet, right? And then kind of what I do is just look at where the liquidity is, the recent liquidity. So I don't like really mark anything off at this moment, but I kind of do afterwards to visually see it. But like I've trained my eyes to see it now. But you know, like all of this here is like exposed liquidity, and kind of this area is exposed liquidity. All of this, obviously you got a little bit there that wasn't, and then right up to where the market opened, to leave like all this is left for algorithms later, so it's for them to eat up. So a lot of the times when you get like price action coming down like that, normally this will be ate up somewhere. Even if price is gonna go all the way down there, it will eat it up. And like, yeah, so that's how I've been trading. And I've noticed the step one kind of thing to do is to like mark off some zones, like potential like bottoms and stuff. So you just find out where the nearest low is and where the nearest high is, just so you know what range you're in. And then from there, I know if price gets above here, I'm going to be looking for longs later on. If price gets below here, we're looking for shorts, as we know, if it leaves the range and stuff. But then the same thing that we look at this in discount, right, in a small little range, I've also found out that the actual candles move in discount as well, because of because it's all linked down to the microsecond. So just imagine like this is the candle, yeah, and when it's moving, it will like range. You can see it on any time frame as well. and then it'll like initiate, and then it'll come back to mitigate and push on further. Like
Yeah.
that's obviously when it's moving, it's more like this, pop, and then it back, bang, like that, and goes forward. So I just keep that pattern in mind in my head, not on the 1 minute. This is like what you kind of look at for the 5 minute. But
Yeah.
if you're on the 1 minute, you just need to know that the small little candles kind of, as it goes like that and then pushes on, that kind of pattern. Let me get rid of this. So yeah, so those are things that I'm keeping in mind. And then there's like a few little schematics kind of thing for the open. So you have the range, right? Like this, a tight range. And before you want a bit of like range, but you want it to be bigger. And then the one kind of pattern is a grab of the pre-market and then push on. Obviously happens that way as well.
Yeah.
Or if price goes straight off, it's going to need to come mitigate. So normally, as soon as it goes off without dipping into this liquidity, right, or without having this being the liquidity grab, it will go up, right, and then it want to come back and mitigate, then move on. Like pretty much, it normally happens within like the first 20 minutes if it does that. Or price does this one. It's all just types of liquidity grabs. You got a range that's been getting bigger over the pre-market, and then it'll come and then it'll just range in there, and everyone's getting trapped in this, and then before you know it, it just goes. And
Yep.
the last one is this one. So yeah, the sideways liquidity, it finds a bit of a bottom, dips in, and then does some shit in here, and then moves wherever the trend is. So like that's kind of what I keep my eye on. And obviously the idea is you get in on the liquidity grab, but you can get in here, you can get at the bottom. It took me like ages to be able to read it. Like I'm talking, I did like 3 years of back testing, twice, just to kind of get a feel for it. But so yeah, so we market having that in mind, market the high and the low, and then we kind of find where's the most square price action. I know it sounds weird, but like this can kind of be one. Let me get a nicer color. There we go. So if you notice that like price is square at the bottom but choppy at the top, and that's just a footprint of algorithms printing liquidity. So the bottom, so what I learned is the guy said, say if you got this, right, and then you've got price action that's like really square at the bottom, right? This here, the orders that are sat below here will look like this. So in order for price to break that, it needs a lot of power. So there's a lot of intention. And whereas the orders above it will be stacked more like this. So it won't take as much, if that makes sense, until you get to this bit here. So it could wick easier in here. But if like price wants to get past this, and it does like that, it's a lot of intention that is. So, you can kind of get these pullbacks and push through. But the only way that I look at this is just look at that. If price is going to dip into here, it's going to find a lot of orders. And like what the algos will do is test it first. So if they push price there and price pushes on, then they'll use that liquidity to their advantage, but they'll use it within the 1 minute candle. So, the candle will move mad, and that's why you get massive wicks, because it's a fake wick. So candle look like that, and then, it'll end up like that. And then the wick will be like this. And then you'll be like, what the hell? It's because it pushed it too far and it found orders. But like really big players in the market have these like algos that will test the liquidity, and they have scenarios for if we push it here and it comes down here, then we do this. If this happens, do this. If this happens, do this. So they're constantly building scenarios. So at the bottom here, like the very first job of the biggest player in the game, their algo is to clear out liquidity. So you normally get like a move up here and a move up there just to clear out the path. So any orders coming in now, you can quickly deal with them by having wicks. That's why you get the mad movement like that. So once it's dealt with the price, it can then start moving up and eating liquidity, but it's got to fight the battle of all these orders. Like the guy that taught me it, just imagine like, you know, orders being thrown at it like this, and it's just deleting them as it's coming, you know, eating them up until it can find a base. Otherwise, if there's no order in it, price would just rack it off like that. If, you know, if we believe what we're told, and, you know, it's just random, you know, price would just be like this. It would be nuts. Do you know what I mean? It has an order to it, and it has a symmetry to it, which is why the stuff that I've learned in IKONIC has made so much sense, because the 50% thing is put there as a footprint of symmetry, you know, so the programs and the computers can work off it.
Yeah, I mean, just think about the term like order flow, right? Like right there, the etymology of the word itself. Like, why do you think it's called like order flow or smart money and Wyckoff? It's all dealing with order flow. That's literally just the study of it. But when people hear like order flow, I guess they don't fully recognize like what's being said. Like I said to you too before, Dex, it's almost like, you know, you're not ready for the information you're going to receive. So that's an amazing explanation what you just did, you know, but it really just shows you the flow of orders or the order flow. Yeah.
Bro, and you know what? Like when I first got taught by this guy, he was like, "Do you want to know? Because if I tell you, you're gonna want to throw your books away." And I did. I threw away loads of my books, like live on the call, man. I was like, "Right, these are going." It is crazy, man. And like that's why I said coming to IKONIC has just been like confirm, 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 confirm of like, okay, so this guy was like, he just showed me properly, and it's just been confirming everything. And I've been like, now I've got a system to put it into action.
Yeah.
Even better than I had before, like the application side of it. So yeah, so you look at it this way, that these squared off wicks, right? Obviously I've got the orders stacked like on top, all at that line there. Whereas the ones here are going to be like more as price goes on, because the algos know that it could wick into here, but they know that this is like a strong wall to break. Yeah. So yeah, so this, I'd have this line in mind, and then obviously I'm just looking with my eyes where the mitigations are. Bloody hell. There we go.
Yo, can I say one thing before you move on? And I don't mean to interrupt.
No, yeah, man.
Okay, so this is why live trading and observation is so crucial, because what you just did there with that like representation of the orders and stuff like that and the wicks, the thing is a lot of people will backtest, right? But you're missing so much data. You can also argue like it's really easy to backtest, because if you screw up, you can just keep clicking, when that's not at all how the market works. Like you're going to have to sometimes, you know, wait a bit for the next opportunity. But what I'm getting at is when you're backtesting, you can miss out on all that data. If you're looking, do you mind actually drawing that out? One, like just really quick, how you did like the super thick line at the bottom and then like the little blotches at the top almost? Yeah, thanks, man. So like if you have, you know, one of these areas or whatever, and say price was trying to go down and it keeps wicking, right? It keeps wicking into this area. Let me even annotate this real quick. Yeah, perfect. Thank you, man. So right here in this area, when price keeps wicking, right? If you're backtesting, you're not going to see that. You're literally just going to see the candle. usually you'll be like nothing, and then the candle will come down as a wick, and then maybe it'll close here, right? So when you click and backtest, this is what you're going to see. You're going to see a candle like that. You're like, oh, look, it's just a regular candle. But if you're watching it real time, you'll actually see like the wick go down, wick try it again, keeps dipping, dips, and it keeps getting rejected. Maybe we can go all the way up like this, and then it comes back down, right? So this is why it's so crucial, I believe this, to do live testing, and once again, to do like the observation where you literally just watch the chart. Because sometimes you'll see this in action where, again, price will just tap, 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 trying to drain out the liquidity. But at the end of like the 1 minute or the 5 minute candle, whatever it is, all you're going to see is something like this with a wick, right? This thing right here tells a huge story, because every second, every millisecond, you know, the algorithms, the high frequency trades are being placed. And, you know, when you see on a chart like that line on your trading view right here, it come down, then back up, down, then back up. Like it's devouring orders. It's just, you know, annihilating them, trying to take them out. So I just wanted to say, because sometimes, you know, when people backtest, they may not see the value in like what you were just explaining. They may be like, oh, well, that's just a wick on the candle. But in fact, it was attempting to break through those orders at the bottom, in this case, you know, so many times, but it closed as a wick. Like we see like in the, you know, the actual price action, not the drawing, just to the left of us. Yeah, anyways.
Yeah, if you do the 1 bar move forward on like any time frame, really, you can see, like, you have to look at the candle and it'll play out, but it does it like so quick.
Yeah, but
You know, like it does, you can do it back testing, but it's just like, it's not very efficient because you don't get the real time feel. And in an instant, it's already at the close.
the other thing
Basically.
that I will say is like that is true, but usually it'll go to like the max. You know what I mean? It'll show you the max or the min of the candle, like that, and then it'll come back. But if you watch it sometimes on the 1 minute, like if you're watching live price action and it's like one of these super price oriented areas with a ton of orders, it'll literally keep tapping, then instant bounce, keep tapping, instant bounce on the same candle. Like it'll just keep going down, up, down, up, down, up, down. You know, but I know what you're saying.
Yeah, it's definitely, you're right, definitely more efficient to observe in real time, because like back test, like forward testing almost is what observation is. You're doing it in real time, you're seeing it, how it's working. So that would be that's a great recommendation. I would agree with you, Chris. Well said.
All right, sorry to hijack that from you.
No, that was good, man. That was good. And you know what? You just give me an idea. Actually, we'll go on the trading sim in a bit, and we'll watch just like a quick 5 minute of the market open live. I mean, the candles don't move exactly the same. A lot of the tick data is missing. Same with soft forex and these trading simulators. It's not the same as live, but it's the next best thing.
True.
But yeah, so I'll just market some lines. I mean, before I used to have a lot more lines, but it's kind of like stabilizers. I don't need the lines in it because I'll just zoom out and know where we are. But you know, if anybody that's kind of looking, you want to just know where price is gonna get out of the range, you know, and obviously we're in a range now. So, you know, price really can do what it wants without getting too much of a battle, if that makes sense, because it's got to battle the liquidity within it. But you know, if price starts coming out of here, it's breaking structures, and then that's like proper intention, you know. And for price to be able to get from A to B, you know, there's a lot of stuff to battle on the inside, but you know, for it to, you can come down here and wick it, you know, not have the power to break through and stuff. So within there, it's like a playground for them, I guess. That's got it explained. And oh yeah, I just spotted something as well. So this is really crucial. This is like a fake wick in a sense of the trend, because it's just been a shitload of orders that I've dumped, and then obviously it's found some resistance and stuff and come back up. But that whole wick really was there for like because of the algorithms and stuff. So I always try and spot these, because sometimes there's orders left and you can get good positions in the pre-market on these. This one here, kind of area to watch, just where it's kind of found at bottom. But sometimes you get like a bit of a move off them. And then the other thing that I like to watch is this mirror effect. It's better in Frankfurt, but whatever happens an hour before the open, right, can leave liquidity for here. So sometimes you'll get like price going like that, and you'll get that on Frankfurt, and then you'll get that on the open, or it'll do the opposite. Which is, I heard, this is not off that guy, this is off somebody else. I heard that like they start like flicking on their machines and getting to their desks and stuff, ready to push buttons, but the buttons that they press isn't like trades. It's okay, this is like 1,000 shares, and then the market will take some, put some there, sell some, take some, and put the market up to get liquidity to sell this lot. It's that's what that guy did, was program these programs to, insert price in the best areas to get the best discounts and stuff, which is why discount works so good. I mean, that for me was game changer, complete friggin' game changer, man. I never understood it properly. People have explained it before, but Chris, the way that you explain it, man, I got it straight away. I was like, oh man, discounts and discounts. I had a breakdown, to be fair, when I first listened to it. I was having a breakdown. I was like, hang on a minute, ranges and ranges, discounts and discounts. What is going on? It's like the Hall of Mirrors. But like after my breakdown, I kind of understand it now. So these are like order clusters from an algorithmic point of view. So they'll leave like little footprints here ready for price to react off, or it can be mitigating out of stuff before. But normally this stuff has nothing to do with the current trend or anything like that. Price could just go down like that. It doesn't have to do all this choppiness. But yeah, and a lot of the times they'll get like in positions ready, so they've got a discount here because they know that like, they talk to each other. They've got WhatsApp groups, so we know that JP Morgan is gonna sell here, so we're gonna get in right here and ride it and sell there, because of their little groups that they're talking.
Yeah, yo, hold on one second. Do me a favor right now. Go on Google.
Yeah.
Oh shit, could you do it on this screen, the one that you're sharing, or does it not have connection? Like if you hit like, command tab, yeah, just go on Google. Yeah, and then type like Forex lawsuits.
Oh yeah, I've seen this.
Yeah, what you just said, the chat groups, right? Because like I say this all the time, and I think a lot of people think I'm full of shit, even though I show it in like the group and all that. But yeah, there'll be a link where it's like they have these names. 4 lawsuits, eh?
4 lawsuits. There we go.
Where
His Forex a pyramid scheme.
Can you go to jail for Forex? Is Forex rigged? I would say Forex is 1,000% rigged.
I don't know where. Here, hold on. I'm gonna find the link and I'll send it to you, so you can keep like recording. Lawsuit. There's this one. Give me like 2 seconds. I'll find it for you. Here we go. Finance magnets or something. Finance magnets. Let's see. Where's that? Hold on. Here we go. Go down a bit more. Right there. Bank cartels. That's what they call them. Yeah. But if you click on those articles, either two at the bottom, like either this one or this one, it'll actually show you like they have, I think it's like, 2,000 chat groups or something on WhatsApp and stuff. Like it's insane, man. And like, it sounds like a conspiracy. You know what I mean? Like people be like, oh, you're a conspiracy theorist. Like, no, dude, like this is factual. Like this shit goes on. Cause I mean, how easy is it to say like, oh, they got all these chat groups and they're out to get you. Like people are like, yeah, okay. But no, like this is the thing. it's so crazy. It could be true. You know what I mean? And it is true. But
Bank cartels might have used 200 chat rooms for FX rigging. 5 banks face civil lawsuits in London over Forex dealing. Class action lawsuit.
let me
All
share.
that stuff.
So it'll be like recorded.
So that you think like JP Morgan and Chase and all them, they all like collab?
I know, Dex, you have a good understanding of how things go on. Do you want to answer that, or?
Yeah, sure, man. Sure. What do you want to know?
Lawsuit accused the banks conspire to share confidential orders, trading positions of Forex, each using chat rooms named the Cartel, the Mafia, and the Bandits Club.
Mm.
All right, and then these guys were paid out 2.31 billion. Got fined 10 billion, and then a year before this, they got fined another 1.3 billion. So I mean, like, you can read the lawsuits and stuff, but yeah, this shit's real. Like, it's pretty crazy.
If you look up, you can even look up back on the charts, Euro versus Swiss franc in like 2013. There was that one day where it was because like the Swiss government came out and said like, oh, the euro, like whatever, price will never drop below this point in comparison to the euro. So like, let's just say price crashed one day.
Yeah.
Like 5,000 pips.
Yeah. Want to take You're right though, Winston. That's crazy.
Yep.
I remember reading that. Yeah. But anyways.
Yep.
Just made me think. I didn't mean to steal your thunder, man. I'm sorry. I'm gonna stop talking.
You're good.
No, I love it, man. I'm loving it. And like in response to what you were saying about the things, just so everybody knows where I got the understanding from. Like a dude, like I said, that used to. I've actually spoke to a few people that used to work in these places, man, and they've got WhatsApp groups. I've seen them with my own eyes. Even Harv knows about them. They share like levels and stuff, and like, okay, we're gonna be like selling at this level. So if you want to buy up to that level, we'll give you the liquidity to sell it instantly. So they don't drive the price down while they're selling it. It's an instant swap through like I need to read from my notes, man. I'll have to like a PDF or something with a few things on. But yeah, it's they have like these different liquidity pools and stuff that they've got access to. Because you got to think the biggest player in the market, where does that guy or that company get their liquidity from? You know, it's because they have it, it's theirs. You know what I mean? They can do what they want with it. And then if they own the first and the second biggest company, well, then who are we? You know what I mean? We're just watching these guys play with their own money.
Yeah.
Yeah.
And
So, go ahead.
Yeah, this was it right here.
This right here. So they said it would never go below like what, 1.2 euros, I think, right? Or something. And this is what happened one day. Okay, so 2,281 pips in one day.
Yeah.
Think about, and actually that lawsuit that you were, or no, I don't know if it was that one or a different one that you just had pulled up, but there was like hefty fines that were put against the banks and stuff, and lawsuits, and like so many, there were entire brokerages that went out of business because of this move, because the liquidity was so like insane. Let me see if I can do that and then go down to the minute 5. No, they don't have the price, of course. They don't have that kind of data, but anyways, yeah, I just wanted to show that because that was like one of the crazier moves in recent Forex history.
Yep.
So
That's crazy, man.
yeah.
It's the same thing with you know, that GameStop stuff. It's just a load of what we say in England, a load of old bollocks, right? And like they did that Ripple thing the next day, and they got everybody to pump Ripple, and they advertised it everywhere. There were millions of people doing it, and I got sucked into it. I did it myself, and it didn't move one bit. It actually tanked, and that's because they just literally dumped on everybody. They give people the hope that, you know, the market, we can get together and move the market, and then they do things like the flash crash. You know, that was just, it's all fake. It's all a fugazi, as the best word to use. You know, and they do these things to make people fear and hope, give them fear of the market and make them hope that they can do things that way. They keep trading this mystical thing that, you know, if people got together and knew what we know, like, it would be nuts. The amount of like millionaires there'd be if people just apply themselves for a year or so. They don't want people to know, so they pay people on YouTube to say rubbish through like sponsorships and affiliate links and stuff like that. I mean, I know of one broker that will pay you like a couple of grand per person you get to sign up, and they don't even have to put a lot of money in the account, and they will give you that much. Like, there's big money to be made in these, you know, the flashing lights on all the broker things, you know, on the, not like the professional offshore kind of brokers, but you know, the other ones, you get all the lights like a casino, man. And it's just nuts that the way that they do it, and they just suppress it because they know that, you know, imagine like if we all got together now, right? And we started some kind of hedge fund, right? And we were taking people's money. I know somebody that does this, right? They take people's money and they give them 10% a month of their investment because they can make so much money in the market. They're giving people 10%. So if like a random guy in Europe can do that, these guys must be making so much money.
Well,
It's
it makes
crazy.
sense because like if you have the terms and it's like, yeah, like if you give me this money, I'll give you 10%. Like I can get you 10% a month, and they're happy. Like,
Well,
but you're making like, you know, 200% a month off of their money. You know, but it's a
So
win-win
true,
because you have the terms and you agree to them, and there you go.
yeah, it's so true, man. And like, you know, even I heard now, like in like 5 years, they reckon banks are going to charge us to keep our money. It's just like you
Yeah.
guys are making money with our money and we get nothing.
Yeah, the interest rates are so bad in the US, but I think it's actually zero now. It's zero interest rate.
pretty much.
I guarantee if it ever changed to a negative interest rate where the customer has to pay money to the bank to keep their money in there, banks are going to start closing down because people are just going to take all their money out.
You think
Yeah,
so?
they will.
I don't know, man. Because I understand what you're saying, but I don't think they would. Like, I think they would, but they may also not, because then we're gonna have to go back to like using mail and money orders, and
Yeah.
like the infrastructure is so built around being digital.
Yeah.
Where that you're kind of screwed, like, because
See,
what are you
yeah.
like?
That's why I don't think it'd ever go to a negative interest rate. Like, I think they know they'd be screwing themselves over because it would just piss off a lot of people. And then at the same time, like, it would just be a big hassle. And it's like, they already make a lot of money off of our money. So, yeah. Anyways,
Crazy. So crazy.
It's a good thing.
But yeah, what did you say, bro?
No, I just said it's a good thought.
yeah.
Yeah, fully. It's such a good topic as well. It's so interesting. But yeah, like some of the things that I've learned, it's just blown my head. And even going back over them, it's like, oh my God, like it's literally like so much information. It's nuts. Like,
Yep.
it's just crazy, man. But yeah, so on the opens, yeah, so these, like, the more square that these are, the better you can notice that they're order clusters. And the reason why they get squared, because this is like a window of schematics, you know what I mean? Range initiation, mitigations. And even on the candles themselves, when they're moving, they're doing it because they're setting up ready for the open. So I don't have a bias, but this makes me believe that, you know, they did this. Well, this was done, right? And then this is just reacting off all of this and getting stuff ready for the open. So
Yep.
where are we now? So okay, so we're just about to open. So yeah, I'd have my eyes like if it gets into here, I'd be looking for shorts because you know it's kind of broke the structure of the pre-market. And then if we get into here, I'd either look for it to come back down or to push on. And that's kind of where when I start looking at it from a smart money point of view. But obviously in indices and smart money, it's harder to read in my opinion than Forex, because Forex is just pure manipulation, whereas in indices have so many people trading them and algos and stuff. It's crazier. So it is like basically you need to be in and out quickly is what I'm saying.
Right.
In my opinion. I mean, some people might be able to go for hours, but I find it harder to read.
Right.
So yeah, so I'm looking at where the orders will be. I know that below here it's going to be a lot of orders, and here it's going to be a lot of orders. So the first candle, I would look to clear out the section of the orders. So it's cleared at the bottom. Now, you get a feel for this after time. I mean, a lot of the time, when the first candle is going to go down, it's way too volatile to be putting positions on. But you can kind of look at the pre-market. And a lot of the time, if you get a position in somewhere in the middle, the price is going to go both ways and come back to mitigate. So it's like a crazy thing to do. But if you've done this for a while, you kind of see that it's got to mitigate. You can kind of get in on the mitigation. So you get a discount price for your trade when it goes up. But
Yeah.
that's a bit crazy stuff anyway. So we look at the next candles now, swept the top and bottom of this tight order cluster, tapped into that one. And then the second candle's probably going to come back down, right? So it's got the top of that. So now price is completely clear now, right? It's got all of this to play with now. And now it's just got to battle the incoming orders that are flying into the market. But it's dealt with the ones that were waiting to be executed on market open. It's cleared out all this. And now you got to kind of look at it and think, okay, where's price going to go? And it's going to be crazy. And it's going to have to mitigate. So the pattern that we've got was the range, the dip, and the push. So that kind of tick that I was saying earlier, just this. And when you see this and a push on, it's healthy. If it was to push on straight away, it's going to come back and mitigate hard. It doesn't always, but a lot of the times you'll get these strong kind of V pattern form in the market. And
So
I bet
that range you have on the bottom there, you draw that up on the higher time frames, I'm assuming? Or not?
I'll just do it on I can do it on the 5 or the 1.
Gotcha.
But it's just
okay.
the distance between the two lows, as long as it's underneath here. If this was here, I wouldn't draw it, but because it's kind of there, there's a lot of liquidity for it to dip in, and it kind of did dip in that one, but
yeah, a little bit.
You'd have to push on it. It'd have to like go like that nicely and then land in and stay in for me to believe that it's gonna go. But this is like my favorite pattern. I mean, the fact that you've seen the dip and the push on is just a great thing to see, because now you're looking for price to come back in. And obviously it's different watching it now, but we'll watch the live candles in a bit. But now it's mitigated the first order that was placed, and now it can push on through or go up. So this is like a good opportunity to start looking at the price action on where it's going to go.
Oh yeah, definitely.
And yeah, so that for me, I would have gotten a short order going down, and then obviously the fact that it just whipped that, now I'd be looking for lungs now, or if it wants to push on further kind of thing. But it's just that clear out of the zone, and a lot of the times it will hit and then range a bit as it collects orders ready and push on. So now I look at this higher, and obviously we've still got that one drawn, but I'll just put it there anyway, just so you can see it. So now we're in this range. I just want a break of here now, and then price action pending, I'll be getting in. And a lot of the times as well, this is the thing, so that's a perfect example. When you get a break, you want the candle to kind of range initiate, mitigate, range, initiate, that's broke,
Yeah.
come back and mitigate, then push on, and then I'd wait for another candle, or the same candle if we still got time, to kind of do it again, range underneath the line again, pop back over, and then this time do it over the line. Then hopefully I'd either wait for the next candle and say if it printed there, I'd want it to pop off, come back again, and just show me that the intention is up there, and not do this, which happens a lot.
Yeah.
But yeah, it's just like the confirmations. It's quite rangy. This is so. I'd in and out the probably got. When was this? Was this today?
Yeah.
Yeah. So yeah, today I just got the. I think I got a buy and then a sell. I just got that move, and then it ranged, so I stayed out. And yeah,
So,
just wait for a solid break up here now. But it's still ranging. And like, you can wait around and catch moves like that. It's always nice and clear once it hits there, because the algo lines, which is like when the algos are going to activate, you can see there like it's created a bit of a range there, like, and you know, it's broke into there, and there there's all the orders waiting here, so pick them up, and then from this point I'd be then looking at from like a range, you know, smart money point of view.
yeah.
But on the 5 minute, it's much clearer. Price action. You know, you can see like what it's done much clearer. I mean, I prefer the 5 minute, but I know a lot of people like the 1 minute. So, and then like that. Afterwards, I'll kind of mark that because I train my eyes to kind of see all this fake price action trapping people, and you know, I know they don't mean to trap people. It just happens while they're stacking orders. But you know, before I'd be trying to go long on the breaks and all that stuff. But yeah, that's basically like what it is. And this was like not the best day because it was ranging, but it is the best day because it's a harder day, if that makes sense.
A high today?
And like, yeah. Pardon?
You said it's a what today? A high?
No, so like this wasn't the best day to show, but it was because it was a rangy day. And
Okay.
rangy days are like harder days, so
Gotcha.
so it was a good example. I mean, if we go on to
Yeah, do you want to do another day, like maybe earlier this week or something? Take us through.
yeah, I'll
Sweet.
do a live talk through of it in a bit. I haven't got the right tools on the sim, but yeah, we'll just watch it live just so we can see like what's happening, and then even like one time if you want, we'll do some like live trading
I'm down.
one of the days, man.
Yeah,
I'm
so
down for that.
you're on at what time? What time of day is it for you?
It's now 8:16 p.m.
Well, I mean, like, when do you usually trade?
Oh, I trade the EU Open and the NY Open, and then I'll trade in between the two.
Okay, so what time for you does EU open again? I'm really bad at doing these time zone differences.
I'll probably do we'll do the NY Open because I just get up on the EU Open, so
Yeah,
I haven't woke up properly. And
right.
if I get a bad trade, man, that's it. That's my day done.
Yeah.
Yeah, it puts me in the mood, man.
Oh yeah, but yeah. If we could do a few more trade recaps, that'd be awesome. Maybe just go over like you know, putting your stop loss in, and like where do you know when to take your profits specifically, and like where do you target, you know?
Yeah, and this is the thing as well. I have like a weird way of doing my stops and take profit. I'm trying to make like an algo to help me do it, but I will like say before the market's open, I'll know. I have like scenarios set up, so I have like this, and then I will do the same thing like up here, and it's kind of like, it's like this, like, so I'll move it out the way of price, and then when I see price approaching it, I'll drag the set of stop and take profit down, and then I'll kind of just like drop it on in price. But I don't always do it, but that's like, say like the market's just about to open.
Yeah, like let's say you were gonna go through a trade right now, like you're getting ready to.
If I was, yeah, so if I was gonna do it, I'd look here, I'd look at that high,
Yep.
that would be a straight line drawn in there.
Sure.
Obviously, imagine I've done all the analysis, and then I'd just be like, if price breaks that, and I don't want it to wick it, so I'll move it out of the way. So I'll have it here, but I'll have my hand ready to delete it. Because you know, the problem you get tagged in and that happens, and then you're crying.
Right.
Sorry, you get tagged in the middle and then down. But that's like it's something that I'm working on at the moment. That is, but it is a kind of good way to have it preset. I mean, on my other broker, when it was trading online, it was easier because you could just have it tapped in ready. So as soon as you click it, it would put it in like that straight away.
Gotcha.
With MT4, it does my head in because
You gotta manually
I have
input
it like,
yeah,
and like you can drag the lines and stuff, which is cool, but I have like an idea in my head of different scenarios, and you know, because it's happening so quick, you want to just get it done, you know. And
yeah.
I mean, a lot of the times, if you watch this candle here, you see that move, the 5 minute done, because like trading the 5 minute, that move right there. So
Yeah.
you see where that order is there. That would have been like, I mean, that's put in the perfect place, to be fair. A lot of the times, if a 5 minute candle is going to come all the way down there, it's going to pull back and mitigate. So whilst price, the candle's there, yeah, like that, I'd just come in and I'd be like, I'd look at it, and I'd have the 1 minute chart next to me as well, just so I can make sure the imbalance is there. And then I'll just drop it in there. And then when that comes back up, it'll take the order. And do that on the 5.
You have like a buy, you'll put like a buy limit, kind of almost like near the bottom, but like to a point where you know price is gonna come back up when it activates.
Yeah, so
Gotcha.
So yeah, so if like this candle is all the way down there and it's ranging, I know that on the 5 minute it can push on. You got to watch the 1 minute as well, but it's the same thing. But the 1 minute will fake you out too much, so
yeah,
I'll just drop it in, drop the order in, or you can just place it if you want and place it. But
like
what I like to do, yeah, I drop the order in because I'm looking on my second screen at the day. So I'll drop that in, and then I'll be trading the day on this screen or looking at it. And then, you know, the other day I looked at my screen and the candle had done that, and I was like $2.5 grand down, and I was nearly crying. And then the candle just went like this, bang, and I was like, oh God, that saved me.
Like on that exact trade? Wow.
No, it wasn't this one. Actually, I think it was actually. This was Thursday, wasn't it?
Yeah.
Is it Thursday? No, it was Wednesday. Wednesday that caught me. But yeah, it's crazy. But with the 5 minute, obviously you get all that information, don't you, of what's happened on the one combined. So for me, it's easier to read, but you've got to make sure that you've got this set up before. So yeah, like with this one, if we look at the 1 minute, I'll do it on the 5 minute, but you can see the price action easier on the one when I'm explaining it. But here we can see that price has left, obviously reacted off there, and it's left all of this stuff there. So my eyes are looking here, but it's a really weird day this is, because normally you get the algo squeeze, which, like I said earlier, price would range, and it will really squeeze down to the pre-market. Then you'd get like a pressure burst of it. And when it's climbing like this, a lot of the times, this is like them clearly setting something up. And like I said, the schematic is kind of it'll climb, and a lot of the time it likes to drop straight in and then obviously move off. But just knowing that, and knowing that it's going to have a lot of pressure breaking these orders here and even this line there. Sometimes it'll touch that and then go, but you just got to be there reacting to price and what it wants to do.
Yeah.
I have to be like really focused when I'm doing it. It's mad. Like if my head's not in it, I can't do it.
Yeah.
But yeah, so on this one, you kind of see how it tapped that and then went, but it's no wicking off massively. That itself, you can get an order on that, because if it's going to push past that, that's a lot of intention, a lot of money being pumped in. And I can't remember on the NASDAQ now, but I looked into the Dow, and I looked into it. The guy told me that per pip, I've got it written down somewhere. I try and this might be inaccurate, but per pip, and there's 100 per micro pip, and there's 100 micro pips in a pip, right? But per 10 pips, I think it is.
Pipette?
Yeah, pipette, some shit like that. Yeah, there's £330,000 as of September 2020 would have to be pumped into the market out of balance from the current price. So basically, if the market was to move that much, right, times 93 by 330,000, and that's how much has been pumped out of balance from the current market cap. Like I said, that might be wrong because I only know the Dow's one. I have got them written down somewhere, but just from looking at that, right, and this is what's so important to me when I'm trading, is that when you get this, right, tick, tick, a 2-tick pullback like that, that is like, I'm just coming up with the figures in my head here, but like 10 million, 20 million, you know what I mean? Like that. It's probably more than that, but that's the way I look at it. It's like money. And that is clear. When it's like ticking along like that, it's just out of balance. But when you get that bang, that's an algo just come in and started, and you get them at round numbers as well, where it'll just bounce off. But here's the problem with that. That's our round number there, right? The market makers have a different round number. Their charts are different. I mean, you can look on your broker and look at TradingView, the numbers are fucking different. So we see that one there. Theirs can be like this far down, and then you see it and you think, oh, it didn't react. It's completely rejected it. It did. We just didn't see it because they've got the true number. We don't get the true number. I don't know if some brokers do, but I mean, yourself, you look at one broker and it's the thing. Somebody said to me the other day, can you send me your position? I want to compare it to mine. So I sent it, and I was like, hang on a minute, I can't even find it. He's like here, like, you know what I mean? And it was there because of the number change. But yeah, like that's really, really important to me. That is just seeing the way the candle moves. But yeah, so there's no real clusters to add here as well. So it's a straight thing. And a lot of the times price will just eat it up fast like that, and again, you have the small range here, and you've got that pattern again, it's crazy, man. It's the range, but then it mitigates something else over there, which gives it the power, and then it can mitigate all of this. And like I said, man, joining IKONIC just made me see this stuff. I was like, oh my God.
Yeah.
Sure.
Oops. And then so here, you want to be looking at, I didn't mark it off, but I just look at it, you know what I mean? I'd zoom out. I look at the chart like that far out. But you'd look at there and try and find the next one as well. So you'd mark the lows off and just look at the reaction to it. And then Obviously, you've got a range there as well. The good thing with the ones like that, it leaves ranges for price to react off, really small little ranges, and it's almost like somebody said it like this before. It's like a van that drives off, picks orders up, collects all of these, goes and drops them off there. You know what I mean? You see it like a van. I love that analogy.
Yep.
That's my favorite, man. But yeah, like just that pattern, man. This pattern's just power. I love it. And then from there, you can see that it's wicking there, building up more orders, and then I'll just either wait, see if it wants to have a big move off that, or just start looking at it from smart money point of view. But another thing as well is the mitigation from down here later on in the day. That's always a good one. If you're around, set an alert or something, and you can always see the reaction. And if you look, we're still in the range of the market open as well. So
yeah.
that for me would be another thing. I'll be looking at that range now and just waiting for it. You know, looking like zooming out as well and looking at, I don't know when's the last time it touched up here, but if it's a blue sky where it's never touched before, the first touch past there is more likely going to be rejected. So if it's blue sky, like never been touched, and we've got no ranges to react to, we don't know what price is going to do up there, right? Which is, I love when like the day is all-time high, because everybody, all these retail traders, they're looking for the top. We're going to short it, we're going to short it. But the best thing to do is just get a scalp off it like that, and it's going to want to touch it like a magnet again, because so many people are throwing orders at it. Yeah, it's at the top, it's at the top. You know, I was one of those guys before, man. You know, or when something's tanking and everyone's finding the bottom and the price just goes like this. Like, man, I'm glad I don't trade like that anymore, man.
So,
but yeah, like
based on what you've told me, you are pretty much just like scalping with smart money at the backbone of that, and like really like, so would you say you're in a trade for maybe like 5 minutes, or depends on the trade?
Yeah, so the initial move is, say, like anything from 5 minutes to an hour, but the way that I trade, like, weird, it's crazy, man. And like I can only really show you live. I've got no way of simulating it unless it's live, but I kind of like to break my orders up. So because I know with Forex it's different. With indices, they wick so much. So I would like, if I'm getting the long here, it would be like this. I'd like get in until price pulls back, cut the position, and wait for it to push on past the last time I got out and mine a structure. I'd be getting in again. It pulled back. I'd stop myself out. I'd keep pushing my thing up, and then, you know, it'd get up here, and I'd have it tight there, see if it wants to push on. If I'm getting short, I'd be shorting this candle. You know, this one comes, pulls back a bit, I'm out. Wait for it to push down a bit, and that's why it's kind of broken up. And
Gotcha.
I've built a script. Doesn't work fully yet, but as soon as you press the button, bang, 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 it gives you your orders like that. But I'm kind of gonna like have a panel. Like, I'll put it in the group if anybody wants it. Like,
Sure.
Once it's done, and it'll be like 2 orders, 4, 8, and maybe something mad like 20. Because what I like to do, if I'm taking a loss, right, and I've just took a red, right, I will re-enter the position, but I'll say if I got caught here, right, and I've just got absolutely raped, right, I'm down, let's say 10 points, I will then re-enter the market, but with maybe 4 times the position size, just so I can catch a smaller move to mitigate my loss. That's if I've had like a really bad day, but I might do that position hours afterwards. I'm just getting my money back. The market's not gonna take the money off me, because with smart money, it's different. You have your 1 pip stop loss. It's great, but scalping, like the other day, I was in a trade here, and the market just literally went like this quick, like that. I like literally looked, and I was like, loads of money down, and then loads of money in profit. I went to take it, and then it went back to there again. And I was like, what the hell just happened? But
Yeah.
it was the news. Like, mate, next time we do a Zoom, yeah, let me show you the thing that I do on the news. I'll get it ready for smart money. You guys will love it, man.
Yep. Yeah, we can
Like,
most certainly do some like live trading, you know, when the market is, you know, at its, you know, next week or whatever, if you're up for that.
yeah, definitely, man. Like I said, I love this group, man. I love speaking to everybody.
Yeah,
Like, it's just great, man. I have to record some trades and stuff because, you know, we're all learning off each other and we all bring in like a piece of the pie, and
for sure.
it's just great, man. I
Yeah.
love it.
Yeah. I mean, every day in the results section, you're posting at least like, you know, about 3,000 pounds. Is that, I assume you're trading pounds, right?
Yeah, yeah.
Yeah. So, I mean, that's crazy good.
Man, it honestly, God, like the past like couple of months has just been like crazy progress. And it is true when people say, and you guys know yourself, that once you find out something that works and you've got it in the bud, you've just got to work on scaling up and also just managing what you've got. And like I split trading into three, and the three ways you can trade. You trade probabilities when you have indicator setups, no emotions. You need to just take every single setup,
Yeah.
and you know, if you've got a 60% win rate, you come out on top. You trade skill based, which is, I see this as like a skill based trading because you've got to like really react to price. And then you've
Right.
got logical trading where you trade with logic and you use your brain, you know, and people don't know what type of trader they are. So they'll be trading probabilities method, trying to add skill to it and emotions, or they'll be trading smart money, thinking it's like, it's a skill. It's more of an art form, in my opinion. You know, it's something you have to like master, the art of charting and looking at the price and stuff.
Yeah. Yeah.
But it's crazy. It's like once things just start to click, it's nuts from there, man. And I never thought that I'd get to this stage, you know. And like, you see how the chart is now right in front of us, right?
Yep.
This, I say everybody's trading journey is like this, you know. You start off here, there's the initial euphoria, that's a pullback. And I always say to people when I see somebody said it to me before, I've had a bad day trading, you know. I've said, you are a wick. You're having a wick right now. Don't worry, you're here, but you've just whipped off. You'll be back up soon.
Yeah.
And that, bro, I have that written on my wall, man. I love that analogy. It's my favorite.
That's a good analogy. Yeah. You're having a wick.
I had. It's so true. And like, you know, I've had so many wicks. I have.
Right.
But yeah, joining IKONIC has been great, man. And I know like everybody just seems to be killing it in there. And even like people that are quite new to it, like the level of understanding is crazy, man. Like I just learn something every day. I do.
Yeah. Yeah. Well, we're happy to
Every
have
single
you.
thing. Happy to be here, man. Yeah, I hope like this made sense, man. Sometimes I think I'm rubbish at explaining things, but it's
Yeah, I think this was a great like introduction video and stuff. And this upcoming week, I'd love to get a few more like live trading sessions with you, if you don't mind. Get to, you
definitely.
know, a few more videos on doing this just in the real time. But this has been a great like, you know, introduction and to explaining stuff. Because I'm like I told you over Discord and stuff, I'm not really too invested into indices like you are. But I'd like to be, you know, why not?
Yeah, the volatility is really good, and you get so many opportunities in them. It's like Forex is like nice and chilled, in my opinion, and like you can catch like really good trades, man. And indices, they're less manipulated but more crazy. But it's just the same logic, just applies everywhere, man. It's just nuts, and you've just got to kind of find out. Like, what I struggle with is I'm still learning like the lower time frame forex, Euro USD style, you
Yeah.
know, and it's the same logic. You've just got to crack it, like crack your eyes viewing it.
Yep.
Like, I'll show you this, man. This is like the way that I mark my charts out after I've finished. The wash line is what is different meanings for wash lines, but the wash line is literally the high, the last high, and if prices touched it and not been anywhere near it for a while, we call it the wash line. I like this, just sounds crazy, I know, but these squares represent stacked long orders that I got in. I traded on the 5 minute, but I just literally aggressively was just stacking orders.
Yeah.
Which is why my P&L looks crazy sometimes, because I stack. And yeah, like that's one way. And then this is quite interesting as well. So price come in, and then the algos kind of cleared out at the top here, ranged a bit more, came down, and then the short zone was only activated like for the start. If it pushed there and passed there, I would have shorted. But once it's gone up, this is not valid anymore. And then, yeah, this one, the charts look crazy, I know. Same thing, a low that wasn't touched for a while, I think it was. And then a high low, that was a yeah, it's from the pre-market, that one is. I should have drawn it a bit neater. But this is like my favorite schematic right there. Square clusters of orders, right? Ranges, all that schematic happening. And each candle will have it 10 times, and the microsecond will have it on. And then there, look, you've got that wick up, straight down, mitigate, did it again, and it's just like a ripple effect, like Chris says. But it's just mad seeing it, man. I feel like the guy from the Matrix. I've taken the red pill.
Right.
Very like next level, like nitty gritty. Somebody watching this video, if you post it, they're probably like, what the hell is going on? But for good reason. It's just like, this is, you don't need to trade like this, like going super, super complex. This is more so like, if you're somebody who wants to know really what's going on, this is just like a very good example of like how the algorithms are programmed, and like you have these weird things going on. Like here's the thing, like if you didn't have any of this marked up, it'd probably be like, oh, it's just random price action, or a complex pullback, as some people would say, right? But it's doing everything like you said, Dex, like to the millisecond of the millisecond. Like it's happening so fast, way faster than we can comprehend. But yeah, it looks random, but it's all calculated. We're just doing it the way we trade. Is we're using the same concepts and stuff. We're just doing it on an easier, like from an easier point of view, if that makes sense. Where instead of doing it to like the 10th millisecond or whatever the heck it's doing, like we're just waiting for the clear direction and stuff like that. And yeah, but this is crazy, man. This is like, I'm sure a lot of heads are spinning.
Definitely, man. And like, mate, this spun my head out when I first seen it. And I actually, let me give you an example of a bad day that I had.
Sure.
So this is the economic news. Like I'll show you the news strategy that I found about the day after I joined IKONIC. We'll do that next time. You guys will love it. But this one here caught me out. So there's the liquidity grab down. It wasn't deep enough, so I should have stayed out. I got a long there, and I quickly got out when it pulled back. So obviously didn't take much there. And then I got long here, thinking that it was going to push on. I didn't really wait for a decent enough pullback into this candle's discount zone. But it can literally just tap 50% of that candle, pull back, push on kind of thing. Didn't happen. I was getting greedy. Yeah, and then yeah, I caught a few shorts. I that pulled back. I managed to get out of that position luckily, and then I went short because it was kind of, if it is not going to go that way, it's going to go that way. So I quickly stacked like 3 short positions, got out of them quickly because it wasn't breaking that. And then if it's going to go short even more, I want it to pull back into this candle's discount. It didn't. That's kind of a new way that I'm looking at it as well. And then got in on pullbacks here. So because I realized it was a range going up, I got into a silly long there that didn't push on. Managed to get out of that with, I think it was like 17 quid. Quickly exited that. And then these were like, as soon as it hit here, I knew it's not going to push on because it's ranging. I just shorted it kind of thing there. And then this candle, I thought again it's going to go down a bit more. So I can't remember exactly what I'd done, but I know these were like really small little, tight little trades, but it added up, you know, to, I don't think it was much money, you know, but because I managed to escape it and that. But this is like a day where it doesn't work so well, but because you know it's in a range, you just stay out. And then this wasn't deep enough, that wasn't high enough. You know, if you look at my orders, they're tiny, where, you know, on this one, on that one, I started stacking as soon as it pushed on past that candle, you know, catching. The reason I put squares is because I can't pinpoint the exact location. I just remember it was somewhere here.
Gotcha.
And then the same here, it was stacked from there to there, all the way down to that low, and then straight out.
Yeah. Wow.
No hanging around. Yeah, so that day wasn't that much.
Yeah, this is definitely a lot more, I would say, high-paced than Euro USD, just because, like, I realize what you mean now. You're trading like the discounts of like individual candles and like just getting in super quick, super fast, getting out super quick, super fast.
Yeah, but like the initial move, like, to be fair, you can say you can get in like long from there and ride it to the top, but because the way that price moves, I like to just lock in those profits, you know, and get in long, take it out, get in, take it out as the candles move. Because if you look on the 1 minute, that is nice and clean. So, you know, being in there, and then I'd still be in when this candle's there, but then it would be this candle pulled back and I'd be out. And then I'd kind of see where price wants to go. If it wants to get in long, you kind of want to get in there. And then as soon as that didn't want to push on more, cutting it. But really, if you held from there to there, you're sweet. If you held from there to there, you're sweet. But I think I prefer doing it that way. But I said this to like somebody else. It's personal preference. I mean, I cannot deal with seeing reds. Like, they affect me so bad. Some people can hold them, but I just can't. I can't deal with them.
Cut your losses, right? That's what they say.
Yeah.
If you're gonna lose, just don't lose more than you're gonna win. Yeah, I mean that's the whole point of smart money. So I see what you mean. Like if you got in at the bottom, where there's two, like, yeah, right there, and you held that all the way up to like the top of the range. I mean, what would that be, like $4,000 for you or something on the, you know? This is NASDAQ. Damn. So like $4 grand in like 5 minutes, 6 minutes.
Yeah, exactly. Yeah.
Holy crap. So yeah, you're literally getting in and getting out. It looks like most of the time within the same minute.
Yeah, so
wow.
It is like within the same minute, but it's like this day was the same. So I remember this day. Now, remember that, like, you got that range there, right? Now, it went with that liquidity grab, right? Which means one of two things. It's going to either want to come back down heavy, or it'll save this for another day. Some days you don't get it. I mean, I remember this day. This was such a good day. But this day was like this.
Yeah, what'd you do that day?
trades.
Jeez, like 30 grand.
So as soon as it kind of broke that area, I was in, and then I think I got in there because it's another thing, right? I forgot to say this. If you're on the 1 minute or the 5 minute, it doesn't matter. You need to watch the time, because as soon as the next minute turns and it turns to 2 minutes into the market, algorithms are going to rush towards that now. So this is the reason why I get out as well. So if I'm holding this, right, and it's getting to the next minute, sometimes the next minute will come, the candle will print and it'll just go. So it's important to, if you're doing this is why it's better to do on the 5 minute, because it's clearer, but on the 5 minute, you still got to watch for the minutes. So
Better
the
to have
next
two
minute
charts
comes.
then.
Yeah, I have two. I've set up a couple of screens so I can keep my eye on it. But on a MetaTrader, I've got the little timer on, so it's in big letters like here. And then I'll be say the timer's about to come, this candle's coming, and then it'll be like this. I'll cut my position and I'll wait to get back in. And
I get
normally the algos are gonna sell it a bit. It's gonna come down here a bit, and as long as it's ranging and it's not looking like it's want to push on, and it's doing this, I'll get in again, and then I'll take it to the top. And then look, that candle printed, it pulled back. I would have been out like there just before the candle closed, or if you think you've took enough profit, take it there.
Probably done for the day after that, huh?
Well, you know what? I kept going on this one. I did, and I shorted it there, I think, as well. And then I went on the down, caught some of that.
Wow.
But like,
that must have been a very profitable day.
It was, and like, as soon as I've done, I'll then move onto like a mess around account, and I'll just carry on taking trades just to like test like how far I can go with the volatility of the open.
Sure.
And I remember this day I was just messing around on like a mess about account, and I was doing it all day, and I thought, God, this is the day where it literally just a trend day. You know what I mean?
Yeah.
But yeah, so it's left that there. It's mitigated that one, so you can always catch the mitigations and stuff. But yeah, it's basically stacking. If I look on the 5 minute, right, this is why the 5 minutes is the best. Right, it would be like this. You can ride the whole of that candle, and then when the 5 minutes is up, you want to get out.
Yeah.
Get out there. Wait for the next one. Keep in mind that wick. If that wick was like that, it would be a fake wick. You wouldn't have to keep it in mind, but because it's a small one and it's not like an overreaction wick, you just watch it, and then that is the support and resistance of 1 minute candles. So yeah, I just watch that. That's why like the 5 minutes the best, because this will like push on and it will pull back. So what you can do is like watch price, right? It'll initiate, it'll like come down and mitigate, it'll carry on as long as you're watching, and each time the candle initiates, you want it to print more candle. So it's printing more and more of it. If it stops printing more candles, right, you need to like think about getting out. And that's like something like this. It'd start ranging probably here. Good time to get out and then wait for the next minute.
Yeah.
Because this one here, yeah, on live, this was probably a harsh pullback, because as soon as that 5 minutes is up, the algos are going to want to discount it for them to get in long, because regardless of what happens, yeah, the BFIs will print the candle where they want to print it, but in between they've got to get from there to there to print it. So then they'll do all their stuff to print it, because if they want it above there, they'll put it above there. If they want it there, they'll put it there. So they have to like do the range initiation mitigation thing. That's why that thing was just so powerful. And like the next candle coming here, if it was there, say, right, and it doesn't break this 50% of that one, like that one didn't, you can stay in your positions if you want, and just get ready to cut and just say, I'm happy with the profit there, because you can maximize profits and stuff. But if you look, it never, because it's mitigating, like it's either going to mitigate or go into discount of that. And that's where you know if it's a mitigation or they're buying more for a bigger move. Like, but yeah, it's just crazy, man. Like this stuff that I've learned, man, it's life changing.
Yeah.
It's been a brilliant experience. It really has. And the thing
Yep.
is, like I've only been here a while. I haven't even been like to many of their live calls or anything. So God knows what's going to happen next. You know.
Yeah.
Looking forward to it.
Do you have anything you wanted to add, Chris?
No, I mean, this is pretty cool stuff.
Yeah.
It's just really nitty gritty, you know what I mean? So it's interesting how you mark everything up and you know what you're sharing. I haven't seen anything like this myself. Like I can follow a lot of some things based off of what we do. Like the one day that I don't know how many back it is now, but the one day you're talking about, you know, it's difficult, like it did have those big moves. It was just simple mitigation of mitigation plays. But yeah, it's sick how like you can pick up certain plays. I don't know, man. It's just cool. It's a nice little chat. So.
Yeah, thanks, man. Like I said, man, you're the thing that in the course, all that information's helped so much. And like it's one thing, yeah, just to get clear, and like the crazy order stop stuff, that is nuts. Like you don't have to do that to do it. You can just take use a big position which you're comfortable and just take one small move. That's all you need, is to be able to, you know, if it hasn't grabbed the liquidity and it's pushing on, it's intention, it's gonna go up, that kind of stuff. And you know, I guess I'm trying to work towards that, because I was thinking, why am I taking so many positions and risking it when I could literally, like, normally the first position I take is green, like pretty much like 99.9% of the time. Like the reds come afterwards. So I was thinking bigger lot size, just take this small move and be done.
Yeah.
You know, just be done for the day, instead of being like, not greedy, but I like trading. It's fun, I guess. But you know what I'm trying to say? You got to think of it like it makes money. Like here's one example of the bang on half pass. Look, you get the move, foreshadowing the opposite happening. And I love this setup. This is my favorite. This range is beautiful. I remember this day. So draw a box from the high to the low, like that. It's staying in that range. I got a few scalps there. Wait for a break of it. Play the mitigation. That pattern, look, it's just, it reoccurs all the time when I open. It's crazy. That dip, there's no liquidity grab because it stayed in the liquidity, building it up, and then it went out, came back, mitigated. Lovely stuff. And if it was more clean and it done that and went like that, it's got no reason to come back so soon then. So wicked. And I did draw. I did draw them out. I have to post them in the group. I drew like some of the ways that they go. Like there we go. And then this is two of them. I need to draw the rest up, but these are the two based on, yes, one, and then there's about 6 different ones, but these are like the clearest plays. And then I haven't done the ones where it comes down slowly, but this is the pattern. You want to be in there, or you can get in on the retests. But the best thing to do is just to get one nice position in and be done like today. today's position. I took one trade this morning on the DAX, just one, and I was done.
Yeah.
And that's what I'm learning learning to do, is just take the one and then that's it.
So how'd that trade go?
I'll show you. That one was, so I did it over 2 accounts.
Yep.
I'll show you the positions. I got them on the journal. We're just copying them over. I didn't know this as well. You know, you can put a picture in TradingView.
Yeah.
How sick is that? I didn't know that, you know.
Oh, there you go.
Put the picture in TradingView. And here's the other one. So pre-market on both of them.
So German 30 and then German 30 cash. I'm assuming that the cash one has a lesser pip value per lot size.
Yes, that's correct.
Because like you're doing 12 lots on there, or the other one's 1 lot, or 1 lot, I should say, which is the equivalent of 10 lots on the cash, I believe, right?
Yeah, that's it. Yeah, that's bang on.
Yeah. So is that FTMO on the cash one that you're doing?
Yes, the one with 12 lots is FTMO. Right. The one with 1 is the cut forex. Well, it was.
Right. So I think like CoinX has just the D30 euro, which is what we're on the Dow Jones on this one. And then FTMO has the German 30 cash, and they're the same thing. Just one is
it just
cash,
moves
one
different,
is
doesn't it? So yeah, today on the DAX, where are we? Take all that off. Right, so yeah, so I did some messing around here.
Sure.
But yeah, that was just messing around. That's what that thing was. But what I was trying to do is, you know, like the move bang on an hour before. So it was there. I was trying to play the volatility, and it didn't really come today. But as soon as Frankfurt opened, we had a bit of a move, pushed up. So it kind of foreshadows it. But yeah, so today was just so beautiful, and it's my favorite setup. Again, the range wasn't so clean, and the clusters wasn't. There was no really squared off clusters. That was a bit squared off with wicks through.
Right.
But the fact it pushed down like that, yeah, I got in on this candle because
nice.
I just knew, man. Like I knew that, you know, the low being there. It doesn't always happen, but I was looking at like where the lows were. I had that one marked off, and then in the pre-market, it started falling down, and the way it was moving, I was like, that is the BFIs getting a discount price, ready for a big move. And I just caught the whole of that candle. Yeah, that was it.
That was it. Then, so your 1 minute trading day today netted you like $2,000.
Yeah, so yeah, it was 1,800 on the one account, and then it was 700 on this account. But
nice. So 2,500 then. Good
yeah,
stuff. In 1 minute.
But this is the thing, right? The sell order, right, came in from the fact that price got so high that it had to mitigate, and it'll wick off. And because I've done it for so long, I just realized that, look, there's nothing here, right, for price to work towards or eat up. There might be a way over there. You only want to look for the past day. Goes, and then yeah, as soon as it pulled back, I thought I'd take a quick cheeky little sell. It was only like 92 quid, but it was a quick little sell. Bit of a stupid position, really. I marked myself down for that today because that was based on nothing.
Yeah.
It was just pure greed. But
hey, 92 quid.
Yeah, could have gone wrong, man. But yeah, that that tight range, and then that liquidity grab in the pre-market can either go one of two ways. It can either go like that and go down, you know, or it can do what it did. But the reason for the position was the way that it moved. It was like that, and then it slowly just started creeping down like this.
Yeah.
And then a minute before, it just went like that, bang, and I thought, you know what? The way that is now, that is just like clear BFIs. And then I was gonna just take the whole of the move, but I was on the 5 minute. So we have a look from my perspective.
Sure thing. Right there, yeah.
Yeah, so you can kind of see the cluster a bit clearer on the 5 minute. It's a bit more square, but yeah. So
Right.
just that move, right now, created a range on the 1 minute as well for it to mitigate and push on. So sometimes I like to wait for this move as well. That comes the mitigation, because like if it didn't grab that liquidity, it needs to come down into here at some point. But then obviously it shifted this zone to there now. But yeah, that's like, bro, it's just crazy, man. Like I'm gonna look into this a bit more, like getting the orders like that, because it is a bit of a gamble, I guess. But it was like this. My order was like there. My start was like that. And then my take profit was, I think I moved it actually. I think I put it like somewhere up there, and then I just moved it down because I thought, oh, maybe it's gonna grab liquidity here and go off. But the way it moved, it was like that, and I was like, shit, bring it down.
Might as well, man. The 1 minute man. There you go. I could see how you could really make a lot of money doing this all day, because it's like you're pretty much closing the order if it goes negative, like instantly, and you're taking a lot of profits really quickly. So what would you say you risk per trade? Like 600 or?
You know what? I'll be real with you, man. Like the way that I see this type of trading at the moment is like I cut the positions off at break even, but it's my job to get the position in profit. This is the way that I see it. So as soon as the position's in profit, my stop's at break even. So or like I said, if the position's here and it's gone up there, my stop will be the candle's here, right? I'll move my stop there, and I'll just take that and orient it, or I'll take that. I'll just keep moving it up until I get stopped out. But
well, that way you can always secure profits.
Yeah, exactly. And like my risk per trade, I would say, say in point, let's just say in money, because it's easy for me to explain it. So say if I'm aiming to make £1,000, I'm willing to like risk £1,000 because I know I can get it back by taking another setup. But at the same time, I try and cut my losses straight away. But if it goes against me, I'm cutting it. I don't care what the number's at, I'll cut it. But like the max, if it did reverse, would be like, yeah, like £1,000 is like where I draw the line. But like I said, I don't like to do that. But at the same time, sometimes you get fake drawdown, where it's just the algos wicking off and they'll come back. But you know, there's no chance it's going to go down. It's got no reason to go down. And then it will go down. So I have sat in drawdown a bit, but now I'm trying to cut it and then re-enter, which is why you see so many trades.
Right.
If I was a bit better, I'd be able to do it in one trade. You know, so I don't know, actually. I don't know whether one trade's better than stacking orders. Because, like, if it's going up, I will aggressively stack as well and start knocking profits off. So there'd be like, say, an order in there. There'd be an order in there. We're getting orders in there, there. And whilst I'm putting that on, I'm taking that one off, taking that one off, taking that one off, putting one there, taking that one off. Like that.
Gotcha.
But I'm still messing about with it.
Right. Well, I mean, you're clearly doing something right.
Yeah, thanks, man. It's
Yeah,
like I said, it's piecing everything together, man. And you know, if the guys in the group like give a go and find something else, man, you know, let's work together
for
and
sure.
see if we can all implement it in some way, because I reckon there's a better way of doing this, you know. And this is why I thought, why it's good to share it to the group because we can all work together, you know.
Yeah. No, we should get on. Let's trade some U.S. Open together at what is it? 8:30 or 8? 8. 8 for me. 1 p.m. for you.
Half two,
What is it?
half two in the afternoon for us guys.
Gotcha.
Yeah, for the MY Open, yeah.
Yeah.
Yeah, half two, man. Yeah, that'll be great. And like I said, it's a crazy way. And like I'll add one more thing. Like I said, this has taken me so much back testing to do and live trading. It's literally took me about 6 months to learn to do that quick. Like
Yeah.
it's a lot. It's been like a lot of hard work, and like I showed a few people the other day, and people just think I'm nuts. I swear to God, people were like, I do not get how you do this, but like for anybody that's listening to this, if you work, it definitely works. You've just got to just keep doing it, and you find like your own style of it. Like the stacking, the way that I stack orders is a bit different, and obviously I have help from the way that I set my orders up as well, and then hopefully I'll have that thing fully completed. But you know, it just takes a lot to be able to view the market, because I said to Chris, man, I had to go through deprogramming therapy. We had a bad experience with a previous mentor who got these like things stuck in my head, hard nosed, and a few other the guys in the group, some of the new guys know as well, and like it was ingrained in my head that if the market's going to reverse, it's going to absolutely tank, and if the market pulls back, it's going to absolutely go like that. So I had to I did this with the investment algo banker coding guy, and
Yeah.
like he'd say to me like, go on the chart and replay the same thing, and it would be like that, you know, replay it, get it again, and keep doing it until you've got your entry perfect and reading the market. I'd do like the same chart on the hour, half an hour, 15 minute, and do the same setups on different time frames, just to kind of understand that, you know, when the candle's moving like this, you're seeing that movement. And when I joined IKONIC, I was like, oh my God, I've got a name for it now. It's the range initiation mitigation, the range, the initiation mitigation.
Yeah.
And then if it does that, right, and comes all the way back, it's then violated all the ranges it's set up there. Do you know what I mean? Like just seeing that, it's just
I
been
see what
crazy,
you're
man.
doing now. So from my understanding, you're interpreting it through the live candle. Like what's happening right now is a range like within the candle almost. Right. So almost down to a micro level of like I guess process, right?
Yeah, exactly.
Yeah.
And you know, I mean, if I flick on to this is the tick chart, and
Yeah.
this is like what I use to understand it as well. If we go on like the custom ticks, trying to get this in. No, sorry, it was 14. That's it. Did you see the candles a bit easier here? But like just
So
the
that's
way
a
that it
15,
moves, right?
14-second chart.
No, 14 ticks.
Or
So it's it moves fast, but if it, like I just sat and watched this because you can see the range initiation mitigation. You can see it now. Look, the way it stops for a bit, comes back, pulls back,
yeah.
and does that. And like understanding how the price moved is just crazy, because you got the range initiation, comes back, mitigates, range initiation, all this, but also the actual tick candle does it as well. And understanding that this is happening within a candle is nuts. And when you zoom out, it looks like any other chart, doesn't it? You know what I mean?
Yeah. Wow. Okay.
But yeah,
I don't personally get down to that. Like, what is it? 14 ticks? Yeah.
yeah,
I keep it on the minute one usually is the lowest.
yeah. I don't trade anything any lower than that.
I feel like
I
this could
studied it.
get crazy. Like if you had zero spread and you just traded on this chart, like you could, yeah. Wow.
That would be crazy, man. I mean, look at
Yeah.
the tick. This is the one tick. It moves so quick.
How do
But
you
like,
even
but
so
yeah,
that's like
studying that. I mean,
per second, huh? Wow.
well, no, this is per tick. So every movement in the market, whenever like an order's being fulfilled, this is
Oh
reading
wow.
it.
And that's how
So
many are
it'll move
happening
fast.
every second, huh?
Yeah, and dude, this is the open now. This is how fast it moves. I mean, they can't even keep up with it.
Yeah.
But you can see like that's the top of the candle. That this would be a wick now, and like just watching this really helped me. I know people probably think I'm nuts, but well, not. I didn't watch this. I watched the this one, the 14 ticks. I choose 14 because it's just on the edge of where you can actually see the candles like that.
Yeah.
But just watching that, you can understand that there's a harmony to the way these algorithms print. So this is like a whole candle, imagine, and they're doing all this financial arbitrage, high frequency stuff. All of this is happening so fast in here, and latency. And they profit off the latency problems between like brokers and stuff. And then just watching it's just nuts. But you can see that like this would be if the candle open there, this would be the top of the candle now, and it's ranging. Now is the candle gonna mitigate down here before it pushes on because it's left the range there? That kind of stuff, just game changer, man. Absolute game changer.
Yeah. Wow.
But yeah, most people probably think this guy's nuts, but there you go. There's the mitigation.
Yep.
But yeah, that's just a good way of just watching, just seeing how it works, man. Because like I said, you zoom out, that looks like any chart. You'd
Right.
the day's ripped today.
Right, it does.
And like when somebody showed me this, they said, look at this chart, and I looked at it and they went, do you recognize it? And I was like, yeah, is that the day or the other day? And I'm like, no, this is like the 14 tick chart.
Yeah.
I was like, is it? It's like, yeah, it is. I'm like, that looks like any other chart I've seen. But you zoom in, it's like, okay, now it looks a bit weird with the wicks and stuff. But it's such a crazy way of looking at the market. But it's mad at understanding like the anatomy. I found the doji the once, and after I seen Chris's thing about the doji, and I pinpointed a doji, and I zoomed in on a tick thing of the doji, and it is nuts. It's so perfectly shaped. It's just crazy. You got like the orders from the high to the low and the squeeze in the middle. I swear to God, it is nuts. No wonder that thing works so good, because if you zoom out, it actually looks like a doji with a line going through it.
Hmm.
Crazy, man.
Wow.
But yeah, man, there you go. It's mitigated that now. And just watching that helps so much.
Yeah.
Like, for real. But yeah, this has been a crazy zoom, man. Like I said, people are gonna probably think this guy's nuts, man. This guy's off his head.
I'm gonna get this uploaded as soon as we're done. Which I mean that's pretty much. Is there anything else you wanted to add, or?
No, just remind me about like the news thing that I found out the other day for the next one. I'd love to share that.
The what? The news? Okay.
Yeah, like
Um,
I spotted out the algorithms trade the news, and I'd love to share that next time.
yeah, we can do that. In this upcoming week, let's do some live trading. Let's trade some New York Open.
Yeah, definitely, man. I love that. Like I said, I'm so excited to be here.
Yeah, we're happy to have you. Chris, anything you want to add before I end this, or? Well, okay. All right.
We've
Well,
lost him.
I think that's gonna do it then. Thanks everyone for tuning in, and I hope this was helpful to everyone. Thank you, Dex. Thanks, Chris, for getting on, and let's kill it on the charts, guys.